Hey,
Look at you. Got a pinch front hat. Look at it.
No, look at it.
so quick intros, Kathleen, Craig, Plinqit, AFT board member. We run in all the same circles of all the same friends, right? So that's pretty cool. And I figured, guys, if you're up for it, I want to definitely talk about Plinqit. The child theme in finance is an awesome one, right? We should also talk a little bit about AFT, and I would love to hear your inside scoop, everything you're doing there. And I think that brings us to the industry as a whole, right? I mean, you've seen a lot like we have of sort of the health of technology companies. We call them FI fintechs that are focused on serving banks, right? And
yeah.
Like
B2B,
yes,
B2B.
yes. So it seems like a healthier environment, right?
Yeah.
And so thinking about AFT playing a part there, and kind of love to hit all that stuff if you got the time.
Yeah, I love it. I love it all. And obviously, as a woman fintech founder in the Midwest in Michigan, when I originally started the company and founded it and said I was going to be B2B, the venture capitalists laughed me out of the room because everyone wanted the Uber of banking, right? And being a former banker, I was a banker, right? So being a former banker, I knew dang well that fintech wasn't a book or a taxi ride, right? And it was highly regulated, and it's going to be a different journey.
I think these days you probably need 25 million bucks just in the marketing budget, right?
Yeah. And
then
then what customers are you getting, right? I mean, I don't know that a Chime is necessarily getting the users that community banks typically go after, right? It's a different market, and it's a bit of the unbanked or underbanked or second chance, right? Which is great. And I want them to have a solution, but different.
You bet.
Yeah, it's funny to me when people in a bank, they'll look at their downloads and think, adoption, and we got 25, 40%. And then we look at Chime and, well, it must be 100%. It's like, no,
every one of these fintechs, you track the usage, and the usage is nowhere near what they all act on.
Claim to be, right?
Active,
and to your point, you said it great though, man. It's expensive to go direct to, consumer. If you and I started a product and we said, okay, we're going to go right to the consumer, this is very expensive, and there's really cool technology behind all that, and we can advertise on Facebook, we can do all this stuff, but at the end you probably end up going broke before you make enough money to survive. And then what customers, this is a great point she brought up, what customers do you actually get? I got a 17-year-old kid with $50, perfect. That's not going to help. My favorite products are bank born products. So when you see a bank comes up with a product like Clayburgh Bank or Texas National, they come up with really cool products. And the same thing happens, like Tanner said, when you come out of a bank and you're thinking like a banker and you already know all the regs and all the cool little things that go on in a bank. So many fintech people, they read a book on KYC,
think that they know,
or at least the first chapter, and they got this, man. And it's like, it's a heck of a lot more complicated than that.
Right. And I love what you said about ethos. I do think a lot of folks that come out, especially the community banking space where my career was born, they do have that ethos and that mission base, right? That's the difference in community banks, right? They are giving back to the community. They're such a part and an integral part of small businesses. So they inherently want to support fintech, these smaller businesses as well, and folks that are helping them. And then they inherently want to help their end user. So it's just interesting how many banker founded companies, right, are mission based, right? They're not quite, what is a B Corp. They're, we're in it for profit, and, we did raise venture capital, so we have to make a return, but we are mission based at our core and really focused on how are we actually moving the needle, and in our world, changing people's financial wellness, right?
So I want you to hit something for me. I think every banker in the world will tell you, catch them when they're young, right? If you catch somebody, you can get a client for life out of that. And you guys have made like a specialty business of that very idea.
Well, it's true to Kathleen's point, right? I'm thinking like a community banker and small town guy myself. When you're walking around town, the whole town, everywhere you go, is part of that banking ecosystem. It could be the preschool, it could be the football team, right? I mean, the small businesses. So I love the thought process behind the kids, man. So tell us about it.
Yeah. Well, one of my favorite stories about being a community banker was I was born and raised in Ann Arbor, where U of M is. So we like to call it a big small town, right? It's not a small town. And when I first started working for the bank, they sent me around, which was very smart of them, to train in each branch. So I got to see all of the different communities we serve. And I will never forget, I was having breakfast with the three people that worked at one of our small lake city, lake town, I guess I should say, branches. And we were having breakfast, and all of a sudden, all of the patrons in the breakfast joint turned over and they're like, ladies, enough breakfast. You need to go open the bank. Like, we need to take our deposits. And it was amazing for me, right? Because I'm like, wait, you all know each other? They're like, of course we do. Go open. We have a deposit to make. We have to get our banking done. And it was awesome, right? And no one would come to my window because I was the corporate person. No one would come. They would wait for their people. But it was awesome to see. And I do think that that's something we try to be thoughtful of. And where we started Plinqit and where we started the company was this idea that community banks should be able to live that ethos, give that same level of experience, and give that same differentiation digitally. Right. And we weren't sure, a lot of people, we felt like that was getting a little lost in all the bells and whistles, and honestly, just trying to keep up, like, I am not someone that bashes on the cores. I tell banks all the time when I'm out speaking to bankers, who's more vested in your success than your core, right? They're the ones that want you to be successful. But with that said, they are dealing with so much to just keep the wheels on the bus that I think you talked about it with Culbertson, right, from CSI. These niche areas like financial wellness, like kids, like savings, like wealth, are just these great areas where experts can come in and really use data, use end user experience, and make a difference and add value, right? That whole 1 + 1 = 3, right? That I think Zach Duke, who's also on your program, likes to say a lot, right?
I love that.
Perfect.
No, and I think that whole area, I mean, and the cores will be the first to speak to it, not just all the multitudes of things they have to keep up with, but the change. I mean, the conversations over there, I mean, everything from BaaS to crypto to, right, blockchain. I mean, they've got some big stuff on their plate, right? And I think for the community banks, when you've got, who is it? It says niches to riches. Anyway, one of my favorite topics, niches to riches. Anyway, but in a community bank, you have this opportunity to focus on those specific groups. And I think also, and more to your point, you've got sort of a life cycle to manage. Look, maybe these kids you're educating end up being on the football team that's sponsored by a small business where they end up working later, right? And then they're getting a loan from the bank. You got to love it. And I think that chain is really important.
Yeah, absolutely. And it's interesting, right? And it's totally understandable. But when in 2008, right, when the financial crisis happened and every bank was trying to figure out how to survive and how to make it through, I think the things that were cut, right, were marketing budgets and probably like kids and financial wellness programs, right? Even though it's interesting because that's when people need them the most, right? Is when we're in a financial crisis. It is understandably something that gets cut. And so that's the other area where I think these niche fintechs leveraging modern tech and cloud-based and data can make solutions that are also affordable, right? That allow banks and enable a community bank to do these different types of accounts without all the added expense and overhead, right? I think, historically, because they're low balance accounts, right? Small savings, goal-based accounts or kids accounts, right? They aren't profitable. What we've done at Plinqit is we use tech, and we not only made the front end, right, and designed that, but we went all the way to the back end and we made our own ledger. So we actually allow our banks to just have one Encore account, and we're the ledger of all these small balance accounts, which again, enables them to be creative and offer things that maybe they couldn't in the past.
I love that. So does your product work directly for that bank's customers, or does your product work on a digital scale nationally?
Yeah, both. So we do keep our deposits local. So we have accounts at each bank that we work with, and we are not trying to be B2C, we are B2B. But with that said, we give each of our banks a microsite. So for example, Choice One, who was our very first customer, a community bank, they were 500 million in assets and took a chance on us because they're in Michigan and we're in Michigan. They have a microsite, choice1.plinkit.com, and anyone that logs in there can become their customer. So they actually, 4% of their users are Chase customers, which we love because we feel like the reverse, like Robin Hood, because we're taking deposits from the big banks and giving them to the small banks, which we feel like is a nice thing.
Well,
That's
a
awesome.
nice thing. That was an understatement. That right there, folks, what she just mentioned is the toughest ball game in banking right
You
there.
bet.
How do you take business away from the big four? If you got an answer for that, you're going to be successful.
I love it.
Yeah. And, again, that's just fun for us because Chase, obviously, they have an automated savings in their app. They have no one would argue that their app isn't, best in class for what's out there, but it is fun for us that folks are still choosing Plinqit, right? Because of the branding, because of the name, also because of how we just treat people and take care of people. We're very invested in our folks getting to that $500 or $1,000 in savings because we truly believe that that's life-changing, right? When you're a tire bus on the way to work, if you have $500 or if you can pay for that cash, it's a very different life experience than if you have to go to a payday lender or use a high interest credit card, right? And so we think those are things that are really different. Again, let's go back to B2C fintechs, and I'm not knocking them. They have really helped us move things forward. They drive our industry forward. They're a source of innovation. But because they went out and raised all of this venture capital and subsidized free with venture capital, sure enough, eventually their investors say, wait a minute, you need to make us money. The clock's ticking, right? So what's the first thing they do? They start feeing their users. So these savings apps that started out free to help people save now are $2.99, $3.99, $5.99 a month. On $500 in savings, that's a net. I mean, that is a terrible interest rate, right? That is as bad as a payday lender, right? And so it's just interesting that, again, I feel like folks are falling victim a bit to that free grab that, of course, everyone wants everything for free, but that's not really practical long-term, right? And I think the banks can really combat that with a lot of with some education, right? And being authentic and upfront.
Man, it's pretty cool when you're saying, look, I can make your bank money. I can catch these customers young. We can build a relationship with early in the game, and we're able to go after, a more inclusive market with better products that really serve maybe a piece that's been missed. Or to your point, I like the way you said that. I don't necessarily like to use words like predatory products, but that's really what you're talking about.
I know, and I'm sorry to say,
some people that's the opposite of that. To bring people in a positive way. There's not a lot of products out there that can claim that.
Right.
Yeah, absolutely. Well, and again, I like to start with good intentions. I know things like payday loans and things started with good intentions, right? I do know that. But let's take buy now, pay later. It started with the best intentions. It was so people could afford things that were big purchases, right? Like my Peloton. Thank you, Affirm, for allowing me to get my Peloton bike. I love it. But with that said, now people realize they could make a buck on it, right? And so instead of where it started with good intentions to help people buy a big ticket item, now it's gone all the way. I was in a store the other day buying a shirt at a conference because I needed a shirt for an extra event I was going to. They offered if I wanted to buy now, pay later that shirt. Now that's insanity.
Well,
like now we're going to have so many buy now, pay laters that folks aren't even going to know. So the next product that community banks need to be thinking about are buy now, pay later consolidation loans, right? Like that's going to be the next thing that comes out because it's
consolidation.
Right. It's lost its marbles.
It's
lost its marbles.
Where did you come up with this idea in the first place of, hey man, we could go in here and kind of do this way and really serve?
Yeah. So I think, again, what happened was, so we had bankers that were our friends. We had our kids at Banker Junior, which is kids mobile banking. And they came to us and they said, we love Banker Junior. We love working with your team because you're bankers, you think like us, make us something for adults. And we said, okay, what do you want? And they said a budgeting tool. I don't know about you guys, but in 2012, the last thing the world needed was another PFM. I was like, no, we're not going to build a budgeting tool because historically also PFMs can be very good for a certain set of people, but they're not going to change behavior. Right. They're not going to change users. Budgeters are budgeters, non-budgeters are non-budgeters. And it's like weight loss. I know how to be skinny, but I like cookies. It is what it is.
So, in my ear, man.
Right. So we were researching, we were like, no, let's really help people. And we did research. We got a grant actually through the state of Michigan. We studied 25 to 35-year-olds, what they were doing with their money, how they were using it, what would help them. And we really kind of honed in on this issue of savings and this idea that 1 in 2 people can't save $500. And we were like, wow, if we could use data and information and make this lightweight so banks could afford to have these little accounts, could we do this? Could we really help people? And so we actually only launched with 2 banks our first year because we wanted to study the data. And now we're just really proud to say that 80% of our users reach their savings goal, right? Because I know, right? And so that's
great.
Yeah, it's super cool and it's heartwarming, right? And that's what we're in it for. And our community banks and our credit unions, they support us doing that, right? They support us in that journey.
I think this is great. I work with a lot of kids on the same issue, and of course, family members, nephews and stuff, and try to show them the positive of just get that, like you said, the first 500. After that, my goal is 5,000. Let's get to 5,000, right? Things are going, I'll tell you, here's another thing that like in our company, what we do is a benefit, I guess you'd call it. We have like an unwritten rule. If your dog gets sick or your refrigerator goes out or you have God forbid, a death in a family or something, and you need, I wasn't prepared for that.
Unexpected things happen.
That's what we do for our employees. And the reason we started that is I tell everybody, gosh, man, about the time you start getting your head above water, that's when something creams you every time. That's when the dadgum refrigerator breaks, not when you were ready for it. And, so saying, okay, if I can save $500 or I can save myself to 1,000 and start realizing how hard that is and how well I got there and how I'm proud of myself for being there. Okay. And then the bad thing happens, whammo. Otherwise, the bad thing happens and you don't have that 500. Now we're back to the buy now, pay later, the debt.
And the cycle. And again, when your pet dies, that is the last thing you want to be worried about is how are you going to cover the expense of it? Or if your pet is sick and you want to save your pet, that is, there's not insurance for that necessarily. And so, it can just be an awful situation. That's wonderful. I get it. I believe that you guys do that. I love that because you did the same thing for AFT as a sponsor, right? You took care of this nonprofit organization when COVID hit and we couldn't have our events. You guys were the first ones to say, hey, we're in this, we're going to get AFT through this. It's an organization that means something to us. And we believe in it. And so, you guys live that top to bottom, and I'm grateful to know you.
Appreciate it. Well, it's pretty funny to know us, right? Because we are the unbanked, the underbanked, the unserved. We shouldn't be served, right? We've always been those people, right? And so nobody understands the struggles of the average person more than we do. We've lived it on many sides of life, and I love products like this. That look, I'm so passionate about community banks for this reason, and I seriously wish that they did a better job of telling people how great they are.
We need to start a FinTech Cowboy like good guy badge where you give them like a good guy like sheriff badge. You know what I mean? You know how Autobooks is doing the whole like winner's belts like the WWE? You guys should like, you know what I mean? You guys need to get like good guy badges or good guy hats or something, because I do think, you guys even hit on something for me that I'm going to use that messaging, right? Because I think the other side of it is folks like you, folks like me, I'm from the Midwest, right? You grow up humble, right? And it's drilled into you to be humble. And community bankers have that same culture, right? So they don't want to brag about what they do. They don't want to share, what they do for the community. And so then the fintechs who are out there spending millions of dollars on marketing, bragging about what they're trying to do, it's hard to compete. The one thing I'm unsure about that I do think is interesting, and I'll be interested to keep listening to your podcast as others talk about it, is the whole banking as a service in every bank. What's interesting to me now is how many banks are selling me to be my bank as a fintech. So that's been an interesting dynamic where sometimes I don't know when a bank's reaching out to me if they want to buy from me or sell to me. And so that's been a little bit of a change and an interesting thing going on in our ecosystem.
Oh, you bet.
We literally just got off a board meeting 30 minutes ago
with the Bass Association,
the Bass Association banks, the board. And, it was a lot of what we're doing there. And the reason we founded that was, there's way too many fintechs for the few number of sponsor banks out there. So we've got, a cool way to bring on sponsor banks quickly, compliantly, and cheap. And there's so many fintechs and so many opportunities. This is what the furtherment of community banking is going to look like in the future.
Well,
Products like yours, products like the fintechs, but you've got to have that BaaS layer where you just basically take the infrastructure. Look at it like you were, any other company, and you've got the infrastructure pieces of what you do every day. And somebody on the side said, hey, I could borrow that, or could I use that to run my company with? Well, it's okay. Sure. I'll just treat you like another business client, and we'll be able to work your specific needs and work that out. But the catch is we've got to do it in a way to where it's regulatory compliant. That's the big rub with the BaaS banks. And so we've come up with a way to do that. And it also, if you think about the potential in the future of fintech and banking,
right.
It's like nitroglycerin. It could be a really good thing or a really bad thing if you shake it up.
If managed.
Right.
Yep. Yep.
That's kind of like the wishbone offense, right?
Yes.
It'll score a lot of points, or man, you're dead meat. You get behind. So
I'm now lost on that, but I get the point.
So the fintech guys have an opportunity to put money into community banking, and community banking can be, much richer for it and serve in a higher level. When we go to everything, just think of everything on a national scale all of a sudden. If you can do banking or do anything else at a national scale, there's people that like yellow water and people that like blue water.
Right.
And most of us drink clear water. But those people, if there's enough of them across the whole country, it makes a market segment to be served.
Right.
Yeah.
That's underserved currently, whether it's in an impoverished community or a community development area that needs help. Those areas are being served through fintech.
Yeah, absolutely. And we're thankful every day for Choice One, right? If they hadn't been a Michigan bank and Adam and I hadn't, their COO hadn't, and I hadn't met at Applebee's to talk all things Plinqit. We're so Midwestern. If we hadn't met at Applebee's to have lunch and talk all things Plinqit and had that first, to your point, bank risk on us and be willing to be our bank of record, be willing to also understand if they were first, that they would need to invest risk resources and help us with compliance and help our journey, then we wouldn't be where we are. And so I think banks getting that message and helping, I think is really great. It's just going to be interesting to, we do need more, but then who is in charge of regulation and helping? I think because I was a banker, because Adam's a banker, we came together and knew we had to work on compliance. I think sometimes it's going to be interesting if the bank's assuming and the fintech doesn't have that expertise, it's going to be an interesting kind of arena.
The BaaS Association.
Yes, there it is.
We feel the same way. Yes. Somebody needs to take the reins on this. Yes.
Yes, absolutely. Yeah. Someone needs to do that. Absolutely. So that they all kind of figure it out together, because that's what I want too, is I want a level playing field amongst fintechs. I don't know that fintechs have to be level with banks, because we know that some of the regulation is ridiculous, right? It's overkill. It causes them to have, to have to do things that are unnecessary. So I don't know that fintechs need to be regulated like banks, but they need to be regulated consistently, right? And in some way, if you're managing people's money. And so what does that look like?
Well, that's a big part of what the BaaS Association does, is set standards for the banks, understand that the bank's ultimately the risk taker here, and the fintechs have got to do what the BaaS banks want to be done, because they're going to be regulated way more than the fintechs are going to be regulated. Now, if the fintechs want to be a bank, go get a bank charter.
Right. Good luck. Because it's hard.
Another one I have to just give a shout out. I so much appreciate you giving a shout out to Choice One. Look, the integrity, right, from the other side is not often seen.
That's right.
And you making the point of, look, and I love the story, right? Hanging out at Applebee's, cool. But look, we all owe so much appreciation to people that have taken a bet on us, right?
Yeah.
And too
I wouldn't
often
be here.
people forget about them, right? You'll have a better deal come along and go take it. I don't believe you would, right? And so I really appreciate you saying that. I think.
And so another shout out, Roger at First Arkansas Bank and Trust, they were bank number 2. So they, again, 1 and 2, I think 1 through 10 banks should get all the applause in the world, right? Because banks always are like, who else do you have on this? Who else has certified this? Who else has said this is okay? And First Arkansas, again, it's been just such a long-term relationship. Now I count them as friends, right? We go to dinner. It's just, a real true partnership. They were actually FIS's first client back in the day before FIS was FIS. So again, some of these banks have risked on several companies that have gotten just a little big, FIS is just doing okay right now,
Yeah. No, we get it. I mean, that's largely he and I, that's probably, if you put all the pieces together, that's probably why we're here. Just
Mhm.
tons and tons of relationships and favors and making sure that nobody ever, we don't want to be involved in something that blows up, and when we make mistakes, we get in there and fix it, and eventually you build enough relationships on all sides of the business that at least everybody knows you can be trusted to not walk away from a problem. Not saying I won't create one.
Yeah.
Been
Not
known
saying
to-
we won't make mistakes here. We are still a human company. Yes, absolutely.
To solve them, yeah.
We're gonna make it right.
We
Yeah.
made it perfect, yeah.
We're going to fix it, right? And we're going to be in it together. I mean, that's something, I came from the restaurant business and I came from a company that's pretty internationally known for service called Zingerman's. And when I came into banking, I was trying to figure out, I'm like, well, you can't give away free money. You can give away a free appetizer.
Right.
What can I do? Right? What's the same? So when I was at my bank, I actually built a program where I gave all frontline team members and contact centers gift cards to local restaurants. So if we messed up, they could make it right in that way. And we were supporting our small business customers, right? So then when I came into a fintech, I was like, okay, what's the equivalent of that? I can't give a bank, if our product doesn't work well and they're out thousands of dollars, I can't give them a gift card to Applebee's. Okay. So what do I'm just kidding. We're just going to keep bringing up Applebee's. I hope they send us a present. Yeah. So I was like, what could we do? So and again, I don't know if others do it, but from my knowledge, we were one of the first to do it. We have an easy out clause. You can get out of your agreement at 12 months with no questions asked. We've never had anyone do it. We have 100% reference rate and renewal rate. But we don't want to be a SaaS provider that's locked you into a contract for a product that's sitting on the shelf doing nothing, right? And I think more and more providers need to be willing to do stuff like that so that these banks aren't, because that's the other thing, we've gotten jaded against providers, right? Because we've had that happen and we've had agreements where then they lock up our data and try to charge us,
You bet.
billions of dollars for our data and
prison
different
file
things.
fee, right?
Yep.
For some
Yep.
unique ID that's been made up. You gotta love it.
Yep.
Yeah.
Exactly.
Great though that you do that. Well, any final thoughts on how many zillion banks you're gonna have? Are you worried about the economic cycle that we're in right now or any of that, or is that a positive for you?
Yeah, absolutely. Great question. So it makes our product more needed, right? Because people need financial wellness and they get nervous and it just reiterates our mission. But yeah, absolutely. I think I wouldn't be a good founder or a good steward if I wasn't worried about capital. We're very lucky. We raised our Series A, I think, in the first quarter. And now we've slowed down our burn and we're hoarding that money. We're still investing in things like AFT and the things we believe in, but we're definitely slowing our burn and slowing our hiring to just, make sure that we can ride it out. Because I do think that's another thing as a mission-based company that I'm sure you guys get. I don't want to do layoffs. I don't want to, do those type of things or be forced into that. So we're definitely being conservative and keeping our eye on it while of course still trying to grow and do what we committed to when we took on the capital.
Well, let's see if we can't get you in front of more bankers and do some things to spread the good word of what you guys are doing and the way you're doing it. I appreciate what you do for
I
everybody.
was gonna say, I appreciate you guys. Thank you.
I've always talked to bankers in the terms of technology for the sake of technology, things that we have to spend money on just to open the doors. That's not going to work anymore. You're going to have to find things that actually work for your customers that make a return for you. And then you're having an out clause at 12 months. I think that's proof in the pudding right there.
Yeah, thank you so much. And you guys, thanks. I'm so glad we got to meet at AFT. Shout out to that great organization. What a relationship organization. I'm thankful for them and all the folks there. So thank you guys.
Such a joy to have you with us. I appreciate it.
Hey, thanks for riding with the Cowboys.
Thank you.
All right. We'll see you next time.